So venture capital 10 years ago used to be more of an island, right? There's Sand Hill Road. If you want to fundraise, it's a scarce resource. You go up and down Sand Hill, and you meet everybody that you will potentially want to meet. In the last decade, a ton of new entrants entered venture, and it became really, really, really crowded. Founders, you better be good at the Game of Thrones. Now, what has happened in the last decade for all this change? 3 macro trends. One is that interest rates have been really, really low, right? And so if you're an investor and you're thinking about where to put money, you don't want to put it in banks because that's going to give you, pretty low returns. You look at venture and you think, wow, this could be really lucrative. So if you're greedy, you're thinking, hey, I should put my money there. The second thing that has happened is it has never been cheaper or easier to start and scale a company. Global, social, mobile, one-click purchase, all the technologies are helping startups scale and grow cheaply without humans. The third thing that has happened is that startups are staying private longer. And when startups stay private longer, it means that they need more private capital to fund this life cycle. Going public is actually quite cumbersome, and it has become less and less attractive for a lot of people. And so as a result, more and more venture dollars are deployed into startups staying private. Now, these non-traditional investors, people who used to not invest in venture, saw these 3 trends and entered the venture market. Everybody from private equity funds, mutual funds, hedge funds, investors in China, they're all deploying capital into startups. Even my mother became a Kickstarter donor or funder. I was shocked.